All right, everybody. So, what we're talking about today is my AR trade recap. This is a trade that I took a couple of days ago. And basically, what I wanted to kind of show you guys is that look, you can lose money too, and it's okay as long as you have proper stop losses in place and you have a proper risk management strategy in place. Now, let's break down the trade. This was a losing trade, not too big of a deal. It could have been very bad. Could have been very bad if I wouldn't have had the proper stop losses and the proper risk management strategy in place, which unfortunately a lot of new traders don't have because they only see the potential to make money and they don't see the potential to lose money. And remember, in the stock market, there's potential to make money, but there's also potential to lose money, and there's potential to lose a lot of money if you don't protect yourself. So in reality, what we do here at Finance and Chocolate is I take a very aggressive stance in regards to risk management. I think that managing risk and keeping your risk level down is pretty much the most important part of trading. And everything that I talk about, whether it's discipline, whether it's trading psychology, position sizing, strategy development, all the stuff that I talk about here, whether it's in the 10-hour trading mastery course, in the chat room, on the YouTube channel, on the Instagram, through email, if you get a hold of me through email, because I'm very active on there as well. And don't be afraid to ask me questions. I'm very, very active on all my platforms. But pretty much everything that I talk about here revolves around risk management because it is absolutely key. So how do we trade this? What happened? And how can we protect ourselves if you get in a situation like this? Well, what we have here is we have a beautiful downtrending stock. Okay, so we're on the day chart, downtrending, downtrending. Right here is where you see this level of resistance, right? So basically this level, starting from here all the way to here, it's been bouncing around there, and every single time it gets down here, it doesn't want to break, right? It doesn't want to break. It keeps bouncing around, bouncing around, bouncing around. So how exactly would I trade this? Well, I did exactly what I normally do. I wait for the breakout, right? And I hadn't caught this till over here. So my breakout level was down around this level, okay? So basically my breakout level was down there. So we get a low, a lower low, a lower low, and then we came down here. And where I took the trade, usually I take the trade at the break. I didn't take the trade here at the break, although that would have been a nice and quick and easy profit. And basically the reason why I didn't take the trade here is I just didn't have time and I missed it. But this would have been a nice trade. Would have entered here. Probably, well, depends. Depends on where your stop losses were. You might have gotten stopped out. But if you hadn't, this would have been a nice trade from 1757 to a low of 1632. Of course, we can't catch lows, and we can't get in at the top, get out at the bottom every single time. That's just not going to happen. But basically, if you're using which we talk about, if you're using like a 1 to 3 risk to reward, something of that nature, you may have just put your take profits here, and you may have just automatically been taken out for a profit. It just depends. But what I want to talk about is how I traded it. So we saw it come down, and then we saw it retrace. And this is actually where I entered the trade. I entered the trade right around here in this level because of the retracement. So we got a retracement. Right, so we talk about the break and then the retracement. Usually what we want to see with the retracement is we want to see a continuation to the downside. We want to see it break. So basically the reason why retracements work is because you get sellers, sellers, sellers. Then you get a bunch of buyers trying to push this level. And when this level fails, basically what you have is you have sellers that take over and regain control. What we had here is we had an earnings release, and it was very, very positive. The surprise was positive, and it beat analysts' expectations, and that's the reason for this move right here. I usually don't like holding or trading stocks while we have earnings, but I also have to listen to my strategy, and my strategy said short. So basically what we got is the day opened down here, and we actually gapped down, got a little bit of downside move, which was great, but buyers regained control, and it was most likely because of this earnings release and pushed us higher. Now here's the thing, where were my stops? My stops were exactly right above and right back inside this trading range. So my stops, we get a red line right here, we're right around here. I believe it was 1771, so actually a little bit higher. 1771, and let's turn this red. And what I'm going to do, I will put screenshots here from the actual trading chat room with the date so you guys can see when I actually took this trade and when I actually entered this trade. But basically, here are my stops. I get stopped out. All right, let's move this down to the hourly. So basically, I enter right around here, right? And I get stopped out right around here for about a 20-cent loss, right? A 20-cent loss. Not a big deal. On 1,000 shares, that's $200. With the potential on 1,000 shares, because in a perfect world, if everything was perfect, I would like to trade 1,000 share positions every single time. Now, I don't trade 1,000 share positions every single time because the world is not perfect, and I'm a big believer on first adjusting your position size, not your stop loss. And I talk about that in the Trading Mastery course, how if you want to trade this many shares, but your stop loss has to go in a place where, due to your risk, you cannot take that many shares. You must lower your position size. That's just, you just have to do that. But anyways, so in a perfect world, I risk $200 for the potential to make, really at the lows, we're talking at least $1,000, if not more. And of course, we want to see continuation. So this could have very well been $2,000 or $3,000 trade. But, and here's the big but, it doesn't always work our way. But we want to put ourselves in places where our risk to reward is the way it should be. And the plan for this trade was to exit half size position down here, move stops to break even, and then hold the second half for a continued move to the downside. But what instead happened is that earnings release, which actually ended up being a positive earnings release, stopped me out right here at 71, and we move on. But here's the thing, and this is really what I want to talk about. This didn't affect me, okay? $200 is not a big deal, all right? And it depends on your account size. If you have a $10,000 account, maybe you're not comfortable with $200 risk. Maybe you're comfortable with $100 risk or $50 risk. It just depends on you personally, your account size. And we talk about how to figure that out in the Trading Mastery course. But in my case, $200 does not affect my trading, does not affect my ability to trade, doesn't give me a margin call or anything. It doesn't affect me at all. So $200 is a perfectly acceptable loss. But here's the thing. This could have been a $200, $300, $400, $500, $600, $700, $800, $900, $1,000 loss if we had not put stop losses in place and if we had not adhered to our risk management strategy. And that is why I believe risk management is absolutely the most important part, because if instead at the highs right here, this is 1849, we got in right here at the reversal, okay, around 1751, 1752, right? So that is basically $1 loss instead of a 20-cent loss. So if instead we just hope and pray, which unfortunately a lot of new traders do, they just hope and pray that they're right, what you end up with is you end up with a loss that's 5 times larger than what my loss was. And it's only because I'm actually disciplined and I actually remember that I'm not a trading god, that I'm a human being, and that I will lose trades, and that's not a big deal in trading. It's okay to lose trades as long as we cover our losses with our winners. We want to keep our winners a 1 to 3, 1 to 4 risk to reward, right? At least 1 to 2. But if we keep them 1 to 1, we will eventually blow up our account. So that's kind of what kind of the stance I take here. Now, what do we do going forward? This might be a nice area to play for a short side as well, okay? This, it might run into some resistance here and it might come down. And the reason is also is if you go up here to the day chart, we're testing that resistance level again, right? So if we take our lines here and we draw this line right here, we are testing, make the red a little bit bigger so you can actually see it. We are actually testing, we're testing this area back here, all right? So we're testing the consolidation zone. We're testing the all-time lows again. Obviously not the all-time lows anymore, but at the time, this was the all-time low for the stock. It's a very, very, it's downtrending. And I think that the stock will continue lower. But I have to understand, I'm not God, and I don't know if this stock will continue lower. All I can do is play the probabilities, play the odds, and take positions where it is most suited in my favor. And if we look back here at previous earnings, there's an earnings here that actually did pretty damn well. So right here, another surprise, a huge surprise earnings. And what did the stock do? If you line this up, the stock moved down, up a little bit, had that move up, right? had another nice move up, but over the long term, it still came down. And I'm assuming this is going to do the same thing. Okay, we had a big surprise here, moved into resistance, which was at one point support, and I do expect the continuation to actually be to the downside. Now, once again, it's all risk and reward. I can't just say that, hold my position here, and then get screwed. What I do is I exit my trade because of my risk management. This could have easily gone all the way up here, right? Could have easily gone higher, but it didn't. The thing is, we don't know which one's going to be the case, and everybody in hindsight is 100% accurate, right? But at the time, what you do is you listen to, and I talk about this a lot also in the Trading Mastery course, we listen to our non-emotional brain. And the non-emotional brain is the person who was taking the trade before live money was on the line. Once live money is on the line, unless you're very, 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 very disciplined, your brain is going to start thinking a little bit more emotionally. If you're not disciplined, it's going to think a lot more emotionally. So we don't want to listen to the brain. We don't want to listen to our brain once we're in a live trade, because our brain is emotional. So now that I'm outside of a live trade, I've exited my position, I can regroup and I can say, well, does this still look like it's going to come down? Yes, absolutely. Where would be a good place to take the trade? And a good place to take the trade is after this up move has finished. So usually when you get an up move, you get an area here where you kind of consolidate. So if we get an up move, you know, it goes a little bit higher, right? Comes down, kind of does this a little bit. This might be the place where you want to take your trade, right? And the reason is because this stock is downtrending, right? And the last 4 years of data is probably not going to be changed because of one single individual earnings, right? We've had earnings in the past, okay? And every single time we've had earnings, let's see, where can we get some data for earnings? Maybe here. Okay, we had a surprise here, right? Then we had a bad one, a surprise here, right? Then a bad one, then a surprise here, right? So we've had good and bad earnings, right? But at the end of the day, what does this stock do? It trends down, okay? So the last 4 years of data is not going to just all of a sudden change. But the problem is we don't know exactly what's going to happen in the future. So what else can happen? This can instead move higher and higher and higher, and we might actually instead get a move to the upside. It's unlikely, but it is possible. And that is why we have to understand our limitations. I'm not a mind reader. I'm not a futures teller. I can't tell the future, which means that what is my limitations are the fact that I'm human, right? I'm a good trader because I've been doing this for a while, but I'm still human. So instead of saying, well, yeah, this has been downtrending, it's going to continue, it's a piece of shit, it's going to go down lower. Yeah, very well may be. But right now is not the place to take the trade. We want to see it consolidate a little bit and continue lower, or what we want to do is run into resistance right here and potentially consolidate a little bit along this line and then head lower. Either one of these trades is going to be a good trade to the downside because of the direction of the stock. So hopefully that was helpful. Don't try to fight the market. Let the market tell you what it wants to do. Right now the market wants to go down with this stock. We're just having a little bit of support due to this earnings. And it's usually a lot of times what it is a bunch of buyers who have been holding forever and who are getting their hopes up. So they say, oh yes, and they rally behind the stock because they've been holding since back here or back here, right? And they've lost a ton of money. And now what they do is they try to, what do they try to do? They try to average down. They try to average down. And when they average down, you once again exhaust supply of buyers. So we might get a move up here as people try to average down. We might get a move here, or who knows, we might get a move all the way up here. I'm still bearish on this stock. The trend says that it is bearish, and until this trend changes, this stock will be a short in my book. This was a small loss, a small price to pay for the opportunity to make 5 or 6 times that in reward. And I will most likely be taking this trade again in the near future. If you are part of the trading chat room, I will always alert that in there. I will let you guys know the trades when I take them. And if you are a member of the Trading Mastery bundle, you also get lifetime access to the trading chat room. That's the beauty of the Trading Mastery bundle, is you get lifetime access to the 10-hour Trading Mastery course and to the trading team chat room, as well as lifetime access to the live video office hours where you literally can verbally ask me questions. So the beauty of the Trading Mastery Bundle is you get lifetime access to absolutely all three of those things. The 10-hour Trading Mastery course, which is really like 15 hours, and I keep adding more content to that. So I did a very bad job at naming that the 10-hour Trading Mastery course. It's 10 hours of core content, but there's a ton of bonus content. So you get lifetime access to that. You get lifetime access to the trading chat room. And then, of course, you get lifetime access to the live video classroom hours where you can actually ask me questions live. Like I said, if you're part of that, if you're a member of that, you will know when I take this trade again. Other than that, I will see you in the next video. I will see you on the Instagram. I will see you in the chat room. I will see you in the 10-hour Trading Mastery course. But most importantly, I will see you out there in the markets, trading live alongside me and the team. So other than that, as we always say here, this is Finance and Chocolate. Trade smart, not emotionally. Don't let your emotions get the best of you. Trade logically and follow a trading plan. My name is Derek Polshek. I will see you in the next one.